Hyundai Motor has booked a 31% jump in second quarter earnings, its highest percentage jump in 7 years. That takes its net profit to about $780 million, just below market estimates. A weaker local currency helped to lift numbers from the US, while new models boosted domestic sales. It is, however, seeing a slump in China's sales. Hyundai is steering its way to higher profits following 6 years of declines. But there are worries that a potential strike by its labor union could dent the bottom line.
Asahi was clearly not the brew of choice today, following news last week that it was buying over the Australian operations of AB InBev, and that's the world's largest beer maker. The deal is worth $11.3 billion, but also involves Asahi doubling its debt load and issuing 10% more in new shares. Moody's Japan placed the brewers' ratings on review for downgrade, saying the deal would significantly raise Asahi's financial leverage. Investors clearly not liking it. The counter closed almost 9% lower in Tokyo today, and that's some $2 billion wiped out.
Thailand's exports declined for a fourth straight month in June, down 2.2% from a year earlier. It's a smaller decline versus what analysts had forecast, and comes after exports contracted 5.8% in May. Shipments to China fell nearly 15% in June on year, and exports stateside dipped more than 2%. June saw a trade surplus of $3.2 billion, which are much larger than the $830 million forecast, partly due to imports falling far more than expected at 9% on year.